I think the important message I want to get out there is do your own due diligence. Don't just listen to somebody, because they have a nice YouTube video, because they are doing nice tweets. Sit down, look at the projects, and then ask yourself, is this something where I think that solves a problem? Can I imagine this is becoming big? And if the answer to this is yes, well, then you have done 90% of the work already.
Hi, and welcome to the Financial Fox, Investing and Innovation Ideas with a Twist. I'm your host, Steffy B, and in this episode, I'm joined by Dirk Hartig, professional trader and PrimeXBT educator, to discuss crypto trading. Many of you will be experienced traders. Some are just dipping in and out, while others are taking their first baby steps and have many questions about the best assets and strategies, portfolio management, and more and more. So this interview will mainly cover the basic, but even the most experienced traders can find some valuable insights. Before we go into the episode, remember that I'm not a financial advisor and any content in this video is for informational purposes only. If you are interested in using PrimeXBT, the crypto platform that Dirk is using for trading, then go in the description below where you can find all the information and a special 50% bonus on deposits, only for Financial Fox viewers. I hope you enjoy the interview. Hi, Dirk. How are you?
I'm very well. Thank you, Stefania. How are you today?
I'm fine. So I'm quite excited to have this conversation because obviously crypto trading is a very exciting thing for many people. There are, experts, but there are also, new traders, people, they do that not on a daily basis. And there are so many questions.
This is basically the idea of a PrimeXBT Training Academy, that we can shed some light on the mysteries of trading. There is so much information out there. A lot of this information is really wrong when it comes to trading. So really, we are on a mission here to be the lighthouse in the dark to guide people. How can you become either a professional trader, or how can you earn some extra side income if you're doing a normal job, 9 to 5?
Well, I'm not sure the 9 to 5 is something that we like to, but
I think nobody does. Nobody that gets into trading as a general, always, everybody always has the dream, of course, to break out of this 9 to 5 cage.
Exactly, and mainly thanks to trading as well, because that's the escape hatch. So let's get started. I'm going to ask you the billion-dollar question. What's your long-term views on Bitcoin and cryptocurrencies?
Well, short answer, my long-term view, especially on Bitcoin, is very, very positive. That does not count for all the cryptocurrencies out there. And to elaborate a little bit on this, I think we are right now in very, very exciting times. We've entered the last quarter of 2021, and we have a lot of those popular and not so popular models out there when it comes to evaluating where, for example, Bitcoin should be in terms of price, that are predicting a steep rise for the last quarter of 2021. I'm going to mention now, for example, the stock to flow model that predicts like somewhere a price for Bitcoin between 100,000 and 288,000 for the end of 2021. So these are really exciting times. As a trader, you're always looking for somewhat of an asymmetry in the market. So meaning where you, for example, have to risk a certain amount of money, but the potential gain you can get from a trade is like a multiple of what you're risking. And I think we are right now living in times of it. So this really makes those times special, because if those models or some of those models come true, we've basically found the holy grail of trading, of long-term investments. This really proves like cryptocurrency is an asset class that is good to have in the long term. It's an asset class that also institutional traders out there. I'm thinking about pension funds. I'm thinking about investment banks. I'm also thinking about countries are good to have on their balance sheet. And not to mention, of course, everyday people out there as a protection against a potential inflation that is coming our way. So really, really exciting. I think the timing for this interview couldn't have been any better.
Okay. You mentioned about Bitcoin as hedge against inflation. We are seeing the Bitcoin is actually performing better than the historical inflation hedge, which is gold. So there is some interesting dynamic happening here. But the question is, because trading is a lot about timing, right? And basically what you said is that by the end of 2021, we could see a significant increase in the price of Bitcoin and perhaps Ethereum to follow. So do you think now is still a good time to get into trading Bitcoin, or is perhaps a time where people should kind of be a little bit more, go a little bit easier?
If we talk about trading, we are not usually talking about, I'm going to use 100% of my money to day trade or to do like weekly or even monthly positions. You always should have like a little bit of a scaling process in there. For example, like my personal scaling process is I have like 75% of my assets locked in really long-term positions, like the so-called hodling when it comes to Bitcoin and Ethereum, where I say like, it doesn't really matter at what time I enter the market. Hodling has proven in the last 12 years to always be a very, very good and very, very profitable strategy. Then again, I'm using like around about 20% of my assets to trade, either on day trades or try to get into those swings. And by swings, I mean, for example, that I'm expecting, okay, if we really reach 100,000 by somewhere in December 2021, I might consider, and this is based on numerous facts out there, for example, on-chain metrics, sentiment, and so on and so forth, to either liquidate that position and even go short if I expect we are entering a bear market then already. And maybe I have like 5 to a maximum of 10% of my position where I enter in some altcoins where I think that those are very promising projects. I mean, for example, Cardano, Solana, Uniswap, those were really, really projects that paid off big time if you invested in those like 2 or 3 years ago.
Okay, so basically 70% is hodling assets that you think long-term are going to gain value, for example, Bitcoin and Ethereum, and then 20% is more like day trading or week trading, depending on what is happening. And then like 5 to 10% is kind of like what are the next big opportunity.
Exactly,
is that kind of like a fair division?
Yeah, that's absolutely, because one rule in trading always is don't bet everything into one direction. Don't like place all your bets onto one horse. If I can, quote something from gambling, maybe there. I'm not saying, of course, trading has anything to do with gambling, but yeah, you should, always have differentiate between this is my long-term position. I believe like strongly Bitcoin, Ethereum long-term are going to become, for example, something like a global reserve currency or something countries and large corporations have on their balance sheets as an inflation hedge. And then, of course, as a trader, I also want to make use of those daily or weekly up and downs.
Okay, so let's talk a bit about, what I would like basically to cover is, what about people that are just getting into crypto trading? Should they be looking at investing in some altcoin, or should they stick to Bitcoin and Ethereum as a good starting point?
I would actually say, like, it always depends, like, you know, how deep are your pockets for starting, obviously. You know, if you have very deep pockets, nothing wrong about looking at altcoins as well. If you're really interested in the process of trading, and in my opinion, trading is a business. You know, it's not like, oh, I feel like this is going up and down. It's like, it's really a business decision if you enter a trade. And you have to determine, where do I take my losses, where do I take my winnings, and so on and so forth. If you're really, really new to trading, I highly recommend to first look at Bitcoin and or Ethereum, because you will have a very hard time finding coins in the top 20, maybe top 30 that are moving in a different direction than Bitcoin or Ethereum. Usually they do, to a certain extent, copy the direction Bitcoin or Ethereum are moving in. So why not concentrate on what is causing the movement? And as I just said, this is usually Bitcoin or Ethereum. And the longer you look at charts, you become more accustomed also. Over time, you'll get kind of a feeling like, okay, where's the next move going to? Where are zones of support? Where are zones of resistance? You know, it's like when you're playing a sport and you're getting better at it, like you're playing tennis, for example. At one point, when you're playing tennis, you can kind of anticipate, your body already anticipates, where's the next ball going? My opponent is smashing at me. And this is the same with trading.
So basically you are saying that charting is very important for trading.
Yes, charting, of course, is very important for timing, but don't be mistaken. The fundamental facts are always more important than any charting. So you can identify supports, resistance. You can use Bollinger Bands, RSI, and whatever you want. If there's, like, you know, something coming out like we saw end of May or in August again, with Elon Musk tweeting about Tesla is going to accept Bitcoin, and then a couple of weeks later, Tesla is not going to accept Bitcoin because it's bad for the environment.
Ideally, we shouldn't have you know, people like Elon Musk driving the market.
That's a whole different story, of course. Yeah. But you know, when any technical analysis you are doing does not count anymore, because the market is going to react to this. So you have to have an eye on that as well, obviously, and be prepared. You know that you are proven wrong. And being proven wrong in your positioning is just part of the game.
Any specific on-chain analysis or research that you are following or you are using for your trading?
I am very much a fan of Glassnode. So they have a report coming out once a week, which I'm always looking at. Because this is something you don't have in traditional assets, actually. And this is, in my opinion, really an advantage of trading cryptocurrencies, especially Bitcoin, that you can get an in-depth view on where did people purchase, who are the ones purchasing at the moment. So there's a difference between a short-term trader, the ones buying or selling at the moment, or are those people, you know, that put those Bitcoin into long, deep storage for a year plus, which is something we are seeing still right now at the moment. So this really, in my opinion, gives you a three-dimensional view. And this is something I always cover also on our YouTube channel for the PrimeXBT Academy.
So basically, is get information and understand the market. That's very, very important. Then if you are new, you look at Bitcoin and Ethereum. Yeah. Now, one question that I have, considering that you are hodling Bitcoin and Ethereum, is are you keeping them on a crypto exchange, or you are using platforms such as Blockify or Celsius in order to get interest, because there is the opportunity to actually get some yield on those assets. What do you do, and what do you saying would be the best way to manage those kind of assets?
There's not really, I think, an answer that is like satisfying for everybody out there, in my opinion. I personally, I have like a core Bitcoin, Ethereum investment, which I really keep in cold storage. You know, I put those away for the future to one time when I will go, when I'll get even older, when I'm now right on, where I can live or inherit to my kids. So those are kept in cold storage. I'm not staking those or anything. Then there's this part of my midterm trading. Of course, I'm like when I'm trading midterm, like weeks or months trade, I'm not always invested 100%. I like to scale in and scale out of a market. So I always have a portion which I currently am not investing. And these coins I scale. And right now I'm actually using PrimeXBT for Ethereum and Bitcoin because we've just started with staking functionality to gain some interest here.
Okay, do you want to maybe share some numbers on the interest that people can get from Bitcoin, for example, and Ethereum?
Yeah, it's between for Bitcoin staking we don't have right now. So at the moment we have Ethereum, US dollar coin, and Tether, and it's somewhere at the moment the interest rates are going down a little bit. So it's around about 1.5%, but we've seen up to 10% in the last months when we prepared to launch that product. So it's always a little bit about timing, obviously. Okay. And you always can increase your yield for staking there. For example, also if you are holding co-vesting tokens. So if you are using our co-vesting platform, maybe because you are somebody that is working the whole day, you don't have time to trade, understandably, and you say like, okay, there are other peoples out there that can do this better than me. Then we have our co-vesting platform, copy trading platform, where you can follow other traders. And if you own those co-vesting tokens, you can get a larger share, not only of the profit other traders are making for you, but you'll get up to 100% more yield as well when you're staking tokens.
Okay, interesting. Moving to altcoins, you mentioned Cardano, Solana. So what I would like to ask you is, how did you choose them, and what makes a good altcoin, an altcoin a good project? Yeah. What are the key elements that you look at when you are deciding, right, I'm going to choose this altcoin instead of these other ones?
Yeah, it has to do something that is not done yet. That's the simple answer. So let's take an example. For example, Cardano. I think the advantage of Cardano over Ethereum, and Cardano and Ethereum are very, very closely related. I mean, the founder of Cardano was the founding member of Ethereum as well, Charles Hoskins. But what Cardano does better is it can transact with the update that is coming up to 1 million transactions per second. And this is unheard of in the cryptosphere at the moment. Ethereum cannot do this. And we all saw with the NFT hype at the moment how high the gas prices of Ethereum can go. If you're trying to mint an NFT and suddenly you have to pay like $400 or $500 of gas prices just to mint it, transaction price that is, that's crazy. So this is something Cardano, for example, solves. Other projects, if we look at something like Polkadot, if you look at something like Uniswaps, they are trying to incorporate really the thought of DeFi into our world. Cross-chain swaps, so it's easy, to on an everyday mission to transact your for example, Bitcoins to other currencies without going too much trouble. And also the thought of DeFi, that you can do things with a blockchain and with cryptocurrencies that you currently need a bank for. I think this is really the future, and this is the fundamental idea of cryptocurrencies, that you don't need the middleman anymore. So I'm super hyped always about projects like this that solve something like this.
I think we mentioned quite a few projects that people maybe new to the space can go and check out. We mentioned Cardano, we mentioned Polkadot, we mentioned Solana. Do you have anyone specific for the DeFi space that you think people perhaps could have a look at?
Well, I think if you start with really something like Polkadot, if you start with something like SushiSwap, you're really good to go already. I think the important message I want to get out there is, do your own due diligence. Don't just listen to somebody, you know, because they have a nice YouTube video, because they are doing nice tweets. Sit down, look at the projects, and then ask yourself, you know, is this something where I think that solves a problem? Can I imagine this is becoming big? And if the answer to this is yes, well, then you have done 90% of the work already, you know, and then you are also confident in your investment.
Exactly. Right. So many traders watching, they are also trading the stock market, or perhaps they are doing currency trading. So there are some kind of like similarities in trading across those different assets. But is there any specific difference that you would say trading in cryptocurrency have compared to trading in the stock market or do currency trading? Forex?
That for sure is. That's actually why I started mainly focusing in especially my day trading activities in cryptocurrencies, because you don't have so much institutional competition out there than you have in stocks, and especially in Forex. What do I mean by this? You have Forex, which is the biggest market in the world. You know, if you have like $4.5 trillion that are transacted by every day, you have a lot of algorithms out there that are day trading, so that are really hunting up and down the 1 minute, 5 minute charts, even the tick charts, to make use of this. And these algorithms can do things that a human brain cannot do. So they'll analyze the market and execute orders 10,000 times in the time it takes you to really do a mouse click. And this is something, at least not to this extent, you do not have in the cryptocurrency market yet. The cryptocurrency market is, it has a quite high volume already, but it's still a young market. So you don't have so many of those institutional players yet. By institutional players, I mean, for example, investment banks, hedge funds that have a budget of tens or hundreds of millions of dollars that they can invest in IT, into developing trading software and developing algorithms every year that, you know, can basically do everything better than a human being can ever do. So, and as a trader, you're always, like I mentioned before, looking for asymmetry. So for deviations between where the market should be and where the market currently is. And if I compare my day trading activities, for example, in Bitcoin to what I do in Euro US dollar, I find like those deviations like maybe 4 or 5 times a day in Bitcoin for my trading strategies. If I'm lucky, I find those like 4 or 5 times a week in Euro dollar. So less competition when it comes to day trading, at least. Not talking about long-term investing now, that's a whole different thing than we have currently in stocks and Forex. So, for example, also in the stock market, you have like over 90% of the daily volume done by algorithms nowadays. And if you want to day trade this, you really have to sit down, ask yourself the questions, what can I do better than like a hedge fund that has a budget of a couple of $100 million per year when it comes to day trading?
Exactly. And sometimes it's really to spot the gems that is quite difficult to find as well.
Absolutely, yeah.
So you mentioned about strategy. Give us some tips for somebody that wants to start trading.
Well, my biggest tip is, of course, there are a number of tips I could give you, but maybe the top 3 tips I can give you are: don't get over emotional. So the one thing that differentiates a professional trader or a trader that is somewhere sitting at a hedge fund or bank from you is not really technology. It's emotions. Those professional traders, they usually have a game plan, meaning they say something like, okay, I'm going to buy Bitcoin now because of whatever reasons, maybe an indicator, maybe some fundamental facts. It doesn't really matter. When am I proven wrong? I'm going to exit the trade at this price because that means I'm proven wrong. And I'm going to take my profit at this price, which usually is at least 2 times higher than my stop loss, by the way, to put the math in my favor, the risk reward ratio. So this is one difference. usually as a new trader, you will be emotionally attached very much to your positioning, meaning like if a positioning goes against you, you'll become sad, maybe you'll become depressed, maybe you'll get some ideas like, oh, I'm going to buy now again to bring down my average buy price, and so on and so forth. And this always leads, at least in the long run, to you crashing your account. So this is the first. You have a game plan. You're not emotionally attached. It's very normal to be wrong on the market. I'm wrong several times a week. The difference is I try not to be so emotionally attached to I try not to take it personally if I'm wrong. And if I'm wrong 5 times in a row, I still have enough money, you know, to continue investing. I'm not going to have my account broke, which leads me to another point, that is leverage. Just because, you know, your broker offers, for example, leverage of 1 to 100, and PrimeXBT does this, it does not necessarily mean that you have to use it. Leverage is for giving you flexibility in your risk management. But especially if you're beginning, try not to use more than 1 to 5 or 1 to 10 in leverage. Because, you know, if you use really 1 to 100 in leverage, your position just needs to go 1% against you, and then your money is lost. And you'll be set. And so nobody out there in the institutional sphere would do that. Keep in mind that if we scroll back to 2008, we look at Lehman Brothers. Maybe the older viewers are still remembering this. Lehman Brothers had a leverage of 1 to 20 and went bankrupt. And caused the financial crisis, by the way, in 2008 because of a bankruptcy. And so over leveraging definitely is like one of those things you really, really want to avoid. Third tip is do not start with 1 minute or 5 minute charts. 1 minute and 5 minute charts are really like the master class of trading, I would say. Like when you've learned everything there is to learn about trading, you can start day trading 1 minute and 5 minute chart if you really have the time also to sit down and trade those charts. So if you really have the time to sit down 8 to 14 hours a day and watch those charts, this is not something you can do in between. So when you're working in the office to check your mobile, check the 5 minute chart, oh, should I enter or exit now? This usually is not going to work out. Because you are only seeing a small fraction of the whole information that is out there at the moment. So start with daily charts. A good way to start always is sit down in the morning, for example, look at the daily chart or weekly chart of Ethereum, Bitcoin, maybe Cardano, and then decide for yourself, hey, is it going up today? Is it going down? Place your orders, place your take profit, place your stop loss. Close your laptop or close your app, go to work, and in the evening you check again. Was my trade executed? Was my stop loss hit? Was my take profit hit? And then you work yourself upwards from there.
Okay, what are the typical mistakes that beginners make that you see is that they are happening over and over again?
Yeah, well, as I just said, being over emotional. That is, in my opinion, really the biggest mistake, over leveraging. And then something I like to call the quick fix. By that, I mean, if you have a position and that position goes just a little bit into the green zone for you, you close the position. Because, you know, that gives you an adrenaline rush, makes you feel good, you know. And this is the risk-reward ratio. So meaning like you close very small winning positions, but your losing positions you let run against you for a big time. And for example, I'll make an example. If you always close a position $100 in profit, but your losing positions you let run against you for $5,000, you have a risk-reward ratio of 1 to 50. That translates into that you need to be correct 98% of the time just to break even, just not to lose money. And now be in mind, like a professional trader, if he's really, really good, and I'm talking about like a statistical metric of 1,000 plus trades now, it's going to be maybe correct like 58 to 60% of the time. So in order to get there, you need to choose your trades more wisely. For example, you have a stop loss at $100 but you want to earn $200 with a trade. That puts you in the position that you only need to be correct 33% of the time just to break even. So you have a higher chance than a coin flip already. You put really the math on your side. And this is really, really, I get it, difficult to execute, but this is what makes you successful in the long term. And I always have people asking me like, or telling me like, yeah, but I'm like 90% correct of the time with my trades. So what could happen to me? But again, if you look at 1,000 trades, the likelihood, even if you're 90% of the time correct, of you having a series of 8, 10, or 15 trades in a row being wrong is almost 100%. So you better be prepared for that.
How important are stop losses? Because some people don't really use them, particularly in with stock and shares, where you should also have stop losses.
Yeah, you always need to have a stop loss. It's just like this, because and I mean, I get that some people don't like them, because somehow, when you have only one time being knocked out at a stop loss, and then this is exactly the point where the market turns again into the direction of your position, you feel like you've been cheated. Yeah. And the human mind is very, very good in kind of focusing on things like this, but blending everything out. That's why I say always, you have to concentrate on what is happening with 1,000 trades, not like with the last 3 or 5 or even just the last trade. And especially in Bitcoin, it's very, very important to have a stop loss, because Bitcoin or cryptocurrencies in general are an asset, where the next black swan event is just around the corner, and where the market just suddenly goes down 10%. We just had this last night at one exchange in Korea, where suddenly the market moved down within a minute by 10% and then up again. And you have to be prepared of this. Of course, sometimes it can be then that you are unlucky stopped out, but in the long term, it's going to be good for your account, because if you don't have this stop loss, it's just a matter of time until one of those black swan events is going to wipe out your account. And there's nothing more frustrating. I mean, let me really tell this. I've been, when I started trading, multiple times in the position, where I slowly built up my account, and then within just a day or even a couple of hours, my account was totally destroyed because I made those beginners' mistakes.
And Dirk, in terms of stop losses, do you set them like 10, 15% below? What are the parameters that you are using?
Depends on how much you want to risk, on your personal risk appetite. So if you are, for example, more conservative, and you say like, oh, okay, I only want to risk 1% of my account balance per trade, well, then you have to, before you enter the position, you have to make out like, okay, where would I exit the position, and then calculate this, translate this into what is that distance into 1% of my account balance. There is no real, like, a universally correct answer to how far away you should set your stop loss. It's highly, highly dependent on, first of all, the time frame you're trading. Of course, if you're on the shorter time frames, if you are looking at 30-minute charts, your stop loss is probably going to be not as far away as when you are trading monthly charts. You probably won't care if Bitcoin or whatever asset you're trading is going down by 5% or going up by 5%. If you're trading from a monthly chart. If you're trading from a 30-minute chart, well, that is probably already very significant then. So really, and this is also one fundamental, I can only advise everybody out there to choose for themselves first, to sit down and really think hard about, what type of risk taker am I? Yeah. Am I getting nervous? When the market moves just slightly against me, am I getting the sweat already here, or don't I care?
I think another important thing is always be cautious of what is happening on social media, because particularly with cryptocurrencies, you see some token being, or some altcoin, they just going to be promoted too heavily. And this is where maybe the majority of people is going to start to learn about, that kind of token. And then everybody buys that, where is actually the top, and you see people selling out. So is very, the social media has become kind of like a tricky platform and the place where there are many pump and dumps, if that is the best way to use.
That is why it's so important that you need to do your own due diligence, and sit down and really think hard. Am I going to invest now in this coin because, some popular YouTuber out there or some popular person on Twitter chilled it? Ask yourself, okay, why is that person doing that maybe? And is that because really it's a good project, and maybe because he or she is invested in that project themselves? And I mean, there's nothing against, like, if you use like 5 or 10% of your available capital to try to jump on those coins, because the reward, of course, can be significant.
Okay, listen, let's talk a bit about the challenges that we are going to see, for instance, for Bitcoin coming forward, or even Ethereum. We know the Ethereum, version 2 is coming out, and, we don't know what is going to happen then. Do you want to maybe break down on the challenges that you see for the next years for Bitcoin and for Ethereum as well?
Yeah. I'm going to talk about Bitcoin now, but everything I say is also true for Ethereum, so for cryptocurrencies in general. And I think the main challenge is now that we are starting to really challenge the traditional financial systems. So cryptocurrencies, especially Bitcoin, are on the radar now of central banks. So two things can happen from this point onwards, in my opinion. You can see a reaction like we saw in China, forbidding everything cryptocurrency related, not just only mining, but owning cryptocurrencies, trading cryptocurrencies, and so on and so forth. Maybe because the country wants to promote their own central bank issued digital currency, which is the case in China, in my opinion. Or you're going to see countries embracing cryptocurrencies and maybe even adding them to their balance sheet, something like we have seen with El Salvador. I mean, being a very small country, obviously, now, but, can also be that we see this within the next 4 years from bigger countries. Maybe some European, maybe some South or North American countries, maybe somebody in Asia, using that maybe not as a legal tender, but in the balance sheet as an inflation protection. And this is not going to be an easy fight. So I think be prepared for something like that. At one point, the countries that have the bigger currencies, I'm thinking about the USA, I'm thinking about Europe, Great Britain, Japan, and so on and so forth, Australia potentially, are going to make it difficult for you to own cryptocurrencies. And they can do so very easy. They can, for example, not only forbid it, but they could say like, okay, it's allowed for you, but for every transaction, you have to pay 30% of a tax.
Yeah.
They don't be mistaken. I'm very, very much into this whole cryptocurrency revolution as well. And long term, it's going to succeed, in my opinion. But short term, there will be struggles. No central bank, no country is going to give up their monetary currencies sovereignty because there's some algorithm that was invented by somebody that nobody knows who that was. But nonetheless, I think we've gone too far down the road already that this whole cryptocurrency experiment is going to fail. So long term, I'm a very strong believer that Bitcoin is going to become the world reserve currency.
Okay, well, we are definitely on on a good track, and considering what is happening with the money printing, I mean, there is not much else to add. Listen, finally, to wrap up, I just wanted you maybe to walk through what, anybody that is interested in getting into crypto trading, what should expect. For instance, what does a typical day of a professional trader look like? And perhaps also let's go back to some of the most profitable strategies that you are using to share again with the viewers, so then they can perhaps put them at the top of their agenda as they are getting into crypto trading, or they are reassessing their crypto trading strategy.
Sure. So, I mean, a professional trader, in my opinion, is a little bit like a professional athlete. I mean, if you look at me, I don't want to compare myself to an athlete. I eat too much for that. And but you have like one thing you see, for example, with almost every professional athlete there, with a golf player, with a tennis player, with a 100-meter sprinter, they always have like their routine they go through before competing. Like, especially with golf players, you see that, they wiggle back and forth, do their thing. If somebody is like yelling at them at that moment, they will break their routine, start over again, because they want to make every shot as repeatable as possible. So they know, like, okay, if I hit this club, this is going to happen. And this is exactly the effect you want with trading. So what I do is really, I try Mondays to Fridays, at least I keep the weekend for my family, to have my mornings always the same, meaning like I come into my office, I usually prepare my coffee, I log into my trading accounts, I bring up my charts, I go through the news, I look at the sentiment. So, I do every morning the same routine, because by the end of the day, I hope by that the result I get from this is always going to be the same. And not talking about the result I'm going to buy or going to sell, but the effect on my mind is going to be the same. It sounds a bit philosophical, I know. So this is one thing I do.
Discipline first. Discipline.
Yeah, it's discipline. That's the German talking out of me, maybe.
Yeah.
I know, but it's not a German thing. I think this is really something shared worldwide by people that are just extremely good at what they are doing, no matter what the profession is. And most profitable trading strategies, in my opinion, are, if you are somebody that really does not have any time, maybe you have to work like crazy every day, and that you really do not have time to think about day trading, maybe not even to think about middle-term trading, well, then buy a little bit of Bitcoin or Ethereum every month. Doesn't really matter at what time of a month you do that.
So dollar cost averaging.
Yeah, exactly. DCAing. This is a super, super good strategy to build up really a fortune over the course of time. And don't, look every day at where the price is. Just don't care. Do that every month. Do that every week. However, whatever, the time frame is where you have some money spared, and then 5 years down the road, look at what has happened to your net worth. And so this is an extremely good strategy. If you are somebody that has a little bit more time on your hands, do two things. Look at the sentiment every day. And you can do so by looking at the Fear and Greed Index if you want to trade cryptocurrencies. Fear and Greed Index you'll find on Twitter. It's published every day, oscillates between 0 and 100. At the moment, for example, we are somewhere in the 70s, means the market is in a greed area. And whenever we go in extreme greed, become a little bit cautious, like the market could turn around. Likewise, if we are in a sentiment that is with extreme fear, become cautious because the market could turn to the upside. And then in your daily activities, follow that sentiment. Meaning, if we are in a sentiment of greed, try to only choose long trades. Follow the trend. Do not try to stand against the trend there. And you can find out how the trend is with the sentiment, Fear and Greed Index that is called, plus, for example, using moving average, plus using something like a Bollinger Band. Secret strategy I super much like, it's very easy to use, is if you are using Bollinger Band, whenever the Bollinger Bands are contracting on the daily chart, it's just a matter of time until we have a large breakout to the south, or to the north. And you can play this super, super good. You don't even need to decide on which side of a trade you are. You can play stop buy or stop sell orders to enter the market when it goes with enough momentum down or enough momentum up. This is a strategy that might be a bit counterintuitive, but almost always works.
Okay, listen, finally, for anybody that is interested to know more about your strategy or want to get more information from the courses, the masterclass that you're doing with PrimeXBT, or they just want to get in touch with you, where should they go?
Yeah, come to our YouTube channel, and I think you'll find the link here below. And we have new videos with me talking about the markets, really Mondays to Fridays every day. I'm really trying very hard to always, keep up with the latest trends there. And you can also please come to our Twitter to see what we are posting there on cryptocurrencies. If you are on those tools, I think you're really already prepared.
Okay, Dirk, thank you so much for your time and for this amazing insight. And I think we cover a lot of things that can be very useful for, new traders, but also for some expert traders that need maybe to reassess some of, the way they are performing their trades. And sometimes I think it's very important, even if you are been doing trade for some time, to just kind of stop, look from outside and say, I'm doing the right things. I'm going to get too emotional. I'm just going too much into something where I should be more clinical. It's always good to reassess your position and yourself regularly.
Absolutely. Yeah, absolutely. I think you perfectly summarized everything I was saying here. And thank you always for also for having me here. And looking forward to seeing your viewers on our YouTube channel. If you have any questions, please feel free to get in touch with us.